Aloha, Big Wave Trading family. Stocks closed Tuesday session in the red, but like I told you this weekend, that's what I wanted. So far, so good. Volume was lighter on all of the indexes during the pullback, but you'll see we are reversing right at resistance. So we're still just in the middle of a trading range with the recent highs here and the recent lows here. Nobody knows for a fact which way we're going to go unless you're running hundreds of billions of dollars. Then you control the market and you can decide which way we go. But in case you don't, got to keep an open mind here. So far, the first day of the pullback test from the resistance, so far so good, but we're a long way to go. The QQQ, as you can see, finished slightly up, but the NASDAQ finished slightly lower, so overall pretty good. The Russell 2000 reversing right at those resistance levels also, but once again, like I said, lower volume. The only problem was the Dow Jones Industrial Average. I have heavier volume on the Diamond and slightly heavier volume on the overall average. But all in all, pretty good session. Really hard to find too much to complain about. There is one noticeable trend starting to develop. My low price oversold swing trade speculative stocks, all those like little names like SLNO, MYO, SPI, I'm starting to see a lot, even though they're moving up, immediately lose that green BOP catalyst that helps confirms that there's a lot of buyers in it. They're rapidly deteriorating. My BOP scans, they continue to contract, and the quality of overall patterns continue to diminish. My perfect speculator scan, while still pretty healthy with right around 400 names, has a lot left open to the imagination right now. The patterns are good but not great, and the internals are worse, and there's just not a whole lot of green out there. And with that being the case, there's still some sell signals. I mean, 50%ers today. AIMT, I no longer have a position in it. DEN was a 50% sell signal. FWRD is a 50% sell signal. CIFS, 50% sell signal. OTEL 50% sell signal, AKCA 50% sell signal. These are all recent longs. They're immediately producing sell signals. Add that to USAT's end of day failure today. And Echo confirmation closed below the 50-day moving average on above average volume with red BOP, full sell signal, leaving us with only a 12% gain. And you're starting to see that there's just a lot of reasons to continue to be cautious on this market. And so with that being said, I do have two new long positions, one ad signal and a hedge for Wednesday session. All of these signals have great reward to risk ratios if you use the most recent lows. While the odds are high that they fail, let's say the market continues to rally, I'm going to at least wish that I took these long positions long if they do make 10-20% moves in a short amount of time. So let's start it off. The first one is DECK, Deckers Outdoor. This is an earnings winner, hence the gap up. Tested that gap up below and has succeeded. Has kind of basically moved sideways on below average volume, and today volume surge, a BOP surge. I wish this BOP level was higher than this level, but at least it's higher than the day before, and I have some clear-cut support levels to work with just in case it doesn't go higher immediately. But Deckers, in my CanSlim scan, confirmed in my tertiary scan, it is extended from the 20-day moving average, so this is only going to be 1% of my account capital. Limit order 94.98 the close. First cut loss right there, 92.07. Final cut loss right there, 89.89. And once again, it starts to reverse on heavier volume and loses green BOP. I'm immediately raising all of my stops. There's just no questions asked about that. I have no qualms going from two trailing stops to just one super tight stop if the stock doesn't move perfectly after I get long. But DEC, 94.98, 92.07, and 89.89, the stops. 1% of my capital. Hopefully it can move anywhere. It's just what I'm looking for here. Let's say that we can try to get it anywhere. Let's say we can get half of that 46% move. That's going to be a 23% move. And what do I risk? 5%. 4-to-1 reward risk ratio. That's what the minimum that I'm always looking for, and there it is. The next long signal, DPS. Now DPS is merging with Keurig, Green Mountain Coffee Roasters, whatever the hell they were, GMCR. They're going to have a $103 dividend once this goes through in the second half of 2018. So it's good to go. We'll see if we hold it for that long. But DPS, candle over candle, not only of this positive merger announcement, but it's also an earnings winner as it hasn't sold off since its earnings. I believe it was the 14th. It's held that low and it's creeping back higher with that candle over candle. Max Green Bop, it was confirmed in my Max Green Bop for 5-day scan, almost in my Green Bop for 20-day scan too. And like I said, cancel quality. So DPS, unfortunately, slightly extended. So here we go again. It should be 2% for canceling, 1% for the BOP, 3%. Got a half it, 1.5% since extended. Limit order 116.06. First cut loss level 114.63. These lows right here. And my final cut loss level for now, the dynamic 20-day moving average, which is I believe is like around 113.03. I believe that's what I saw on stockcharts.com. Please go check it. But as this moves up, once it evens out with this low here, if the stock is moving higher, obviously I'll go from 2 stops to just 1 stop here. But DPS, this is one of the best looking stocks in all of my scans tonight, but you know, with this market, chances of it succeeding is 50-50. It's actually slightly higher of it failing, 60-40 probably right now based on the overall market structure. Ad signal, URGN. Really like this overall chart, biotech stocks, but I noticed a lot of biotech stocks did not perform well today, so this one's kind of bucking the trend. So we'll see if that continues. If not, I have a solid game plan. URGN, my IPO scan, was also confirmed in my price volume BOP surge scan. That would normally be a 2% signal. It's an ad signal, so it's only 1%, and I may even reduce that smaller to 0.5 to 0.75% just because the group doesn't look that great right now. And also, once again, that BOP, well, I like it surging from the recent levels. I wish it was above that day, you know, at least I get some more positive divergence. But the pocket pivot point signal on above average heavier volume, good enough, especially if I get long at 50-40 and then use today's low a day as my first cut loss for, or actually, is it yesterday? Yep, yesterday, excuse me, or Friday, sorry, 46.79. So the first cut loss level, if you get long at 50-40, 46.78. And the final cut loss level for now, 44.14, which is currently my first stop level. But if I get this position added, I'll have 1 stop here, my second stop here, and then my third and final stop on my original entry, which is over here, will be right there on URGN. And then the final signal for Wednesday, EFZ. This is a legit hedge signal. I got quite a few hedge signals triggering, but BOP is going in the wrong direction and they're all extended. This is the only one that had BOP surging from the previous levels with a big volume surge. So I figure might as well go ahead and add some, you know, European, Asia hedges to my portfolio. So EFZ, want to get long 25.21, excuse me, 25.20 because it's extended from the 20-day moving average. My bad, 25.20 is what I want to get long. First cut loss level, 24.88, and then my final cut loss level, I'm going to let it work all the way back possibly to 23.77 before I get completely out of EFZ. Now, EFZ was only in my ETF scan, but it was confirmed in my tertiary scan. If it had more volume, it would have made my price volume BOP scan. So I will go ahead and put 1% of my account capital into EFZ. So 1% into EFZ, 1.5 into DPS, 1% into DEC, and anywhere from probably about 0.75% in URGN. Once again, keeping all of these long positions very small. And I will repeat, if I was a small trader, small account with high commission costs, and I consider anything over $5 high or $4 really high, I would not be taking any of these signals because I don't care how nice DPS is. Where's the massive volume surge today? Where's the quiet volume on the pullback? So it isn't perfect, so I wouldn't take it. DEC extended isn't perfect, wouldn't take it. URGN, it's pretty good, but biotechs, you know, just aren't hot, and URGN just isn't a smooth trender. It likes to chop before moving higher, and BOP isn't quite there. EFZ, thin. So all of these, you know, there's an issue with all of them. So caveat emptor continues. Cash still continues to be king as we continue to hopefully consolidate these most recent gains before moving higher. But either way we end up moving, lower or higher, I've got a game plan and I'm good to go. You should be also. That's the only way to approach this stock market with the weirdness that it trades in, with V-shaped rallies, V-shaped downtrends, quick reversals, quick upside movement, and skewed volume totals. Keep all that in mind.